Hey folks, and welcome to the Pipnotic Symposium for the 24th of February 2020. I'm in Ubud at the moment. We're out having some lunch, and so I'm sitting in a restaurant, so you might hear a little bit of noise in the background, some music, some people chatting, and a couple of scooters and chickens and stuff, so my apologies for the distractions in the background that you may hear. But today I wanted to share something that I've been working on for a while, and what it is a study. And so I've created a couple of different versions of an algo trader. So I have pools and I have another algo trader that's running, and I've had these two running on two different live accounts, and I've kind of let them be for a while. And one of the accounts has been running since August of last year, and the other one has been going since December. So I have a lot of really good information, and the reason I'm using live accounts is because I believe more in live data than in kind of simulated or demo data. And so the data is really accurate, and this enables me to draw some conclusions that I'm able to share with you all. Okay, and so let's have a look at this. So the method is simply setting up a configuration for these two algo traders and letting them run without too much fiddling. Okay, and so I had configuration A, configuration B. Configuration A was running on one of the accounts for longer, and one of the accounts was pools was running with the help of an individual, and so that data is not part of this study. I mean, I've also found out that why a lot of these trades have been losing, because the conclusion was that most of these trades were losing. Okay, and this is really interesting to me. And as Deadpool said today, why don't you just, like, instead of a buy, put it on the sell? And I wish it was that easy. I've seen this kind of study result in similar outcome in the past, and unfortunately it's not that easy. But it doesn't matter. The cool thing is that I spent like a few $100 and I have gained tremendous insight as a result. So it's a really good investment, I think. The algo is opening a trade, and obviously I want to limit my risk, so I have to have some kind of a stop in place, or I have to know when I'm getting out. It doesn't have to be a stop loss, but there has to be some kind of a risk mitigation measure. If there isn't, well, then there's unlimited risk. And so letting it run, letting the losers run is not an option. Okay, and so as a result of studying many trades over the course of the study, and I'm seeing a lot of really interesting things in the winners that is very fascinating and really worth the effort. Okay, and I think you'll all be quite surprised when you see some of the commonalities, but the losers as well. So let's have a look at the losers. Okay, what were some of the commonalities between the losers? The main one was that there was no concept of where price had already been. And so if I draw this, let's do this on a price chart. Okay, if we focus on this little piece here, how price went up here, and notice we reacted on this little this area of supply here, but notice when price is up here, price has already been back here because price went up and we moved sideways. This is kind of eating pancakes from the plate, and so our price will have to come below this area here in order to find buyers. Okay, so we had one level here. Okay, but notice also that we have this little pattern here that you can see inside this box. This is interesting. This is showing us where the slingshot is pulled back. So between these two candles, you're seeing price rally. We're moving sideways. The slingshots pull back, and then we leave. This slingshot being back is pointing to the beginning of the buy zone. So here, if I draw that over. Okay, so it looks something like that. Okay, and so, price came down and we had a bit of a bounce. And so these buy and sell zones, they're fascinating. Okay, and notice here that once price has already been back to that price level, well, we can expect it to go lower, especially when you have demand located below price. So once price comes back to this level, well, then you don't want to pay a price any more expensive for that. And within this little price structure here, there are going to be more rallies, sideways, rallies, sideways. So you have to go and look inside this to find the fresh ones that price has not visited. And if we look here, you can see that price stopped here. So let's have a look inside this one, this line there, and then we'll have a look and see what we can find. So if we go like that and we have a look, price came to the edge. This is the daily one. Okay, so this is a candle that left. Slingshot was pulled back to here. This is where price came to the pip. Price has already been there, so don't buy there again. Look lower. Okay, and then you can see that we have this accumulation. Price went up, we came down, and then we went higher. Okay, and price came back to this area here. And why did it come back here? Well, we had this area of accumulation. You can see there's another wick that pulled back before price left. Okay, so this is where price naturally will react at. But notice here we have another one going on here. oops, come on, and so you move it down here, and this is where price comes to and reacts at. Okay, these aren't set and forget entries, but what they are areas that we can expect price to have a bounce at, and you can see that really clearly when you look at this thing here. And so the concept of where price has already been plays an important role. Why? Because liquidity or pancakes have been removed, and so you have we have this area. Let's just box off the whole area like so, and on this plate you have pancakes. You know, we just draw them in. Okay, and so every time price comes down into the box, we remove a pancake. And so the next time price wants a pancake, it has to go deeper and deeper and deeper. And so this one's gone, so it's going to go deeper. When this one's gone, it's going to go deeper, and so on and so forth until the area has been removed. And this is one of the primary reasons most of these trades lost. Okay, the next one was no attention of what was driving price. This is what we refer to when we ask the question, what is currently driving price? So if you go to the daily or the weekly and you see that, note here, price reacted at daily demand. What does that mean? Well, that means that daily demand is driving price. Okay, so that means that until we meet opposing a daily supply, we're only buying. Okay, and we're buying into the beginning of daily sell zones and daily supply. Okay, so what does that mean? Well, that means price is probably going to have a bounce here. Once price has already been back to this area and continues on, it's probably going to go back here. And once price returns to this area here, well, then it's going to look for micro areas in here and bounce at those. Okay, so this is super important information to pay attention to. Okay, so what is currently driving price? On this price chart, we have daily demand is currently driving price. If we go to, let's say this one here, let's go to this one here. What's going on? We have daily demand that is driving price. The most recent area of supply and demand, either it has been created or price has reacted at, that is what's driving price. And you can see that there's a real keen interest on buying. Why? Because we formed this area of daily demand, and this is the most recent area that has been formed. Cool. Okay, poor quality supply and demand. And when I say poor quality, I think we can sum this up to parents and children or excessive periods of trading. So if we have a look at this one here, I mean, price went up, then we went down. Is this poor or is this good quality supply? It's actually pretty horrible quality supply. And why is it? It's because price has already traded in that area very, very much historically. Price went up and down and up and down and up and down. And so what's this up and down doing? Well, we have our plate here of sellers, we have our plate here, and each time price goes up and down like that, the number of pancakes below and above is going down. And so that means when price starts to do this and form clear demand below this area, we can expect it to go through. Why? Because there is no supply left in here. This is all gone. So this is super important again. Okay, and so once this happens, well, then you want to mark off these areas of the beginning of buy and sell zones, in this case sell zones. So notice here that we had this area here, this has been removed, it was tested, and so you just move it higher, and you can see here we had accumulation, or distribution rather, price left here, and this is a reaction to this. And so on here we could mark off, let's just go like that. Okay, let's do this, and this is a place where we can expect price to have a bit of a bounce. Okay, will it stop there? We don't know, but we do know that there's fresh supply up around this area here. This area here, at the highs of this one here. Why? Because this is where the slingshot was pulled back to before it left. Above that, we have nothing. This is poorly formed supply. Okay, this is really poorly formed supply, but we have this up here. Okay, this candle left, and this is kind of the deepest retracement since that. And above here, we have the beginning of the sell zone, which is about right there, because this candle closed below this area of supply. But notice as well here, I mean, price has already traded a ton in here, which means what? Which means that price is probably eventually going to drift higher. Okay, so if we have a look at these, price came to this area here. Is that a surprise? It's not. Why? Because this is exactly what we just looked at. Sorry. We had this candle closed below. Okay, so the slingshot was pulled back to this area here. We can even refine that. Let's pull back to the high. Okay, and this is where price went to the pip. Okay, and it looks like magic, but it's not. It's actually a result of a common and simple study of how liquidity is distributed in the marketplace. Okay, which we've done just here. So it's super fascinating. Okay, let's have a look at more. And here we have, this is the next one, which is actually pretty important. You know what? I would actually move this up here because this is super important, and this is trading between origins. So when I say origin, I mean, where does price go to? Let's just note here we have highs, lows, 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 lows. We have highs here. Is price reacting inside here? It's not. Price is reacting at the extremes. It's being sold above price. It's being bought below price. It's not being bought or sold in here. So you have to overshoot for sales and you have to undershoot for buys. And so you have to go to where price has not been yet. Price has already been around in the middle here. Okay, this is where the liquidity voids are located. You have these pushes lower, and so inside this there's no liquidity to either buy or to sell. And so buying and selling there is just a really bad idea. What price does, it goes to the highs and it goes a little bit deeper. Why? Because if price is able to turn around at this point and come back down, then price will probably do the same thing if it goes to this point or higher, or if it comes below this point and lower, or this point and lower. Okay, and so you have to find these fresh areas in the market where price has not been. And trading in the middle of these moves is just generally a really bad idea. And this, of course, is fractal, and so you're seeing the same thing. It's kind of an ugly price chart. Let's have a look here. So you're seeing the same thing here. Where do we have some clear pushes higher and lower? You can see we have one down here. This is kind of like a low. I mean, slingshot was pulled back and then it released. We have another one down here. Price was pulled back and then it was released. Okay, so you're seeing these up here as well. And above price, well, is price being bought and sold here? No, it's not. It's going to the highs here. And it's going to the highs here. It's not being traded inside here. When price reacts at an area like this one here, then it kind of fills all this. This is not supply and demand. This is price reacting at supply and demand. So this is liquidity being distributed. This is liquidity being accumulated. We have accumulation of liquidity here. Again, we have the same accumulation going on here. This is what has already happened, and this is what is going to happen when you're looking above the highs and below the lows. The winners, if we focus on this one, the entries are where price has not been. Well, we saw that on the other price charts. Let's find something completely different to look at. You can see, I mean, where has price not been? Price came down here and it's been up here. Where has price not been? Price has not been above these and it has not been below these. Okay, so we have demand, and we have supply here. Okay, so the buy zone is down here, the sell zone is here. There's nothing to do in here, nothing to do, unless you're doing it above the highs and below the lows. Okay, we had this one here. Price got close to it. We came down here, we got close to this one. This one went beyond this one, and we sold off. Once price comes below this and this, what's going to happen? You're going to see price move higher. Sorry, I've got animals on the roof here. Sounds like a big rat or a monkey, I'm not sure what it is. Trading with the major flows, I mean, how do you do that? Well, you go like this. You can zoom out on the bigger time frames. In the weekly, is price moving higher or is price moving lower? Just give it to your child. And I say, Maris, I mean, what's going on, man? Is price moving higher or is it moving lower? And then you can see very clearly that price is moving lower. What does that mean? Well, that means you probably want to be looking for supply to sell at and not demand to buy at. Okay, cool. Let's have a look at some more. We have a choosing supply and demand that shows strength. Well, how can we see that? Well, we can see that pretty clearly. Here we can see we had whopping strength there. Look at that move. We had whopping strength here. We had whopping strength here and here. Well, most of the ones where the software is drawing these areas of supply and demand. We had really nice turnaround here. Okay, we have nice turnarounds here. We have nice selling here. Okay, and so you can see these. I mean, the software is bringing this to our attention. It becomes pretty clear to us, I think. Putting your entries where other people are going to have stops. And so where is that going to be? This is also very interesting because I think if we look at this down here, price came down, it went up, it came down, it went up. I mean, if someone was buying here, where would their stops be? Probably. Well, their stops would probably be down here. That means that your entry should be close to where other people are probably going to have their stops, which is going to be below the major swing lows and above the major swing highs. Okay, so stops are up here. What does that mean? That means that you want to be looking to sell here, want to be looking to sell around here, and buy around here. And the interesting part about that is that most of the losers were taking as a result of trading between the origins. Okay, so you have like origin highs and origin lows. Trading between those, I mean, there's no stop stuff going on in there. The stops are going to be above the highs and below the lows. And also then we have this one, which is realistic targets. So if I get into a trade here, do I expect this trade to continue higher until it gets here? Am I going to hold it until we get up to here? I'm not, because it's not realistic. You have to consider the time frame that you entered on. Okay, and then you have to consider, where do we have opposing supply? Because price is going to go to sell zones and buy zones, and it's going to turn around there, and you can almost count on it. Running on 20 minutes, so I'm going to leave it at that. If you have any questions, please send them in. Thanks for watching.